Today, ladies and gentlemen, 4 stocks that are literally printing money as we speak by the definition of they're not in my portfolio, they're probably not in yours, but you should definitely consider them. So we're going to head over to the computer and break all these down for you. So let's jump right into this. Welcome back, my passive income investors alike. Today is a very exciting video because I want to show you the only stocks that are by the definition of money printers. Their dividends are incredible. Their growth rate is absolutely absurd compared to most companies. You probably don't own them already. And I'll give you a little tiny hint that you couldn't even be doing what you're doing as an investor without these guys. They're literally one of the most important parts of the entire financial sector. 2 of them you definitely know about, and I'm pretty confident you don't know about the other 2. So come on over to my computer. I'm looking forward to breaking these down for you.
Alright, ladies and gentlemen, here we go, starting with numero uno, ASX. That's right, we're talking stock exchange companies. Most people don't even realize they can actually own the exchange that basically lets you trade. And to stop these companies becoming monopolies, they've actually had to divvy up some of their assets due to government control. That's how crazy large these companies have become. And we're going to start with ASX, which basically is just one of the exchanges we can go over really, really quick, but we're going to break down another one of these as well. This company currently trades at a PE and a multiple that's unusually high compared to the market at 33, with a $16 billion market cap and a 2.6% dividend yield. But man, when you want to look at a growth company, look at that chart. These are the companies that, by the definition, I would consider print money. So if we look at ASX Limited on their financials, and we'll go into Yahoo because everybody uses Yahoo Finance, we're going to take a quick peek at their gross profit margins, which we can see increase steadily time and time and time again. And then if we go down to what I like to look at the most, which, what is it in here? No, we're not on the balance sheet, sorry. Let's open up the balance sheet and take a quick peekaboo here at the good old total assets, which is the first thing I usually go to just to see if this company has profitable assets. And it looks like they're pretty barred out because when we look at total liabilities versus total assets, but for a financial company with the stability they have, this is usually what you're going to see. And when you look at PE ratios, they vary so drastically from sector to sector. So in a sector like this, I could definitely expect a higher PE with the growth that these companies are currently experiencing. So ASX is the first one that I'm going to look at, but more importantly, I want to look at ICE. I like ICE a little bit more, obviously, for its charting. Dividends a little bit lower, but the PE is lower as well. It's about a $10 billion less for market cap, and I just think it's a little bit better priced, but at the same time, just look at this chart. Like, even since 2008, this chart is just absolutely exploded. And if we take a look at ICE, basically, well, let's go into the website, the Intercontinental Exchange, as they call it, transforming global markets through information technology and expertise. But so long as you just keep trading on our platforms, we don't care what you do. So you can see they own the New York Stock Exchange, a massive, massive conglomerate. Well, they own a lot of the ETFs, and they do a lot of different management stuff under the financial services. And if we just take a quick peek into the Yahoo Finance as well, let's take a quick peek at their financials. Same sort of deal. You can notice that they've had an insane growth rate from 2015. Their revenues are up substantially, or their gross profit margins. And if we go into their balance sheet, open that up, we're going to look at the same sort of deal. Total assets and versus total liabilities, we can see is much nicer than the other company we were just looking at on ASX. So they all have similar charting. It looks like this company's had some earnings that are down. I'd have to analyze this a little bit more. This looks a little different than I would be expecting. But the fact of the matter is, guys, these companies literally, by the definition, print money. They're not going anywhere anytime soon. And with a chart like this, guys, where if you just purchased it at the peak of 2014 here, you would still be up. Oh, let me see if we can get this to work here. You'd still be up a whopping you double your money. Literally in 5 years, you would have doubled your money. So I can't get over these companies, let alone the dividend that you're going to be getting as well. I would like to see, maybe we'll take a quick look on dividend history, shall we? Let's see what this company's done for increasing its dividend, because what is this? ASX dividend payment history. It looks like we've had growth. So here we go. Let's go back to, it looks like we're only going to be able to see 2015 unless I switch pages, but this should give us a good layout. So it looks like for the last 4 years, we've gone from 39 cents all the way to $1. But the dividend looks very, very choppy. So I'm curious to see what the payout ratio is and how much they're paying out. That might explain why the dividend's so choppy. It might be like GEO, that prison stock, where it's pretty much a guaranteed dividend, but the stability of it's kind of all over the place. But let's move into the other part of the financials that I want to talk about, the ones we all know, Visa and or Mastercard. We'll start with Visa, though, because these are, again, they're just, the infrastructure for this is so large now, they might as well just be a conglomerate. And when we look at their balance sheet, guys, or before the balance sheet, when we look at their just overall charting, we're talking about a PE of 35, which seems to be average for the financials. I think we're a little over the top right now, but we're still talking about, look, Oh, $380 billion market cap, my friends. Not a very good dividend history, but the fact is you ain't buying this for dividends. You'd probably be more or less buying this for growth rate with a company that didn't seem to crash out too much in the '08 crisis. Well, it kind of did, I guess. It went from 20. I guess it had the same kind of download. Dividend increases over time. So let's just take a quick peek here. Visa, I think, is a little bit more stable, I'm going to say, but not really. Look at the dividend history. This is really confusing. So we're looking at quarters from 17. Let's go all the way back here to what the hell is going on? Oh, what the heck is going on with this? I'm so confused by this charting here. Record. So does it go down? So what is this? 06, 08. So is this 08 then, and we're going up as we go down? That's confusing. Usually it's the other way around where you start with newest dividends and go down. But anyways, let's take a quick peek. We're starting at 20.26 cents from 2008, which was a long time ago. So let's go to 2014 where the numbers make a little more sense. You understand the past wasn't that far ago, but we're looking at just about 10 cents for a dividend. And today you'd be receiving 25 cents. So this is increasing quite rapidly, but the problem is the dividend yield is starting at such a small pace. And when a dividend yield starts at a really, really tiny pace like this one does, I mean, sure, they're doubling it every 4 or 5 years, but you're going to go from 0.5 to 1%. But so long as the growth rate continues, because that's what we're looking for here. So let's just see their financials real quick and go over this. And same sort of deal, but oh my God. Look at the increase, guys. Isn't that astronomical? These are the definition of companies that literally might as well be printing money. But total assets versus liabilities, we can see that this company is astronomical and their charting is just through the roof. I can see why this company continues to grow in an insane rate. Now let's compare it to Mastercard and see what one would be maybe a better buy. We all know what these cards do. They make a very, very, very tiny percentage off millions of transactions, so you don't even notice it, but trust me, they notice it. And this company's trading at a way higher multiple of 41. It's got a lower market cap and it pays a lower dividend, but same sort of charting. It looks absolutely astronomical. It looks like it's had a better growth rate than Visa has had. But at the same time, guys, look at that. From 2014, you'd been getting an 11-cent dividend. It looked like they had a pay cut here in the past, which causes for some concern. But at the same time, from basically 2014, we went from $1.10, which might have been a special dividend, to 11 cents. And then from 11, we went to 16, 19, 22, 25, 33. So if you got the 11 cent, they would have tripled their dividend by now. But again, I'd have to figure out why the dividend's been so choppy lately. It's a little confusing. But essentially, it's still growing faster than Visa is, so it's kind of playing the balance game here. Maybe these are two good companies to own little bits of in your portfolio. But let's see if the financials are just as good, just to jump right into this really quickly. Let's just take a quick peek. We're looking at total assets of way less assets than Visa has for sure, but the total assets are still astronomical, and it looks like they have more liabilities than... It looks like their liability versus asset isn't nearly as good as Visa. Like I said, if we go back to Visa here, guys, we can see that the total assets are way, way higher and way lower for total liabilities. It looks like a 50-50 split almost, whereas with Mastercard here, we're looking at not a 50-50 split. This one's a little bit more this one's a little bit more tighter, but the reason that is clearly has to do with the growth behind this company. I don't know anything about the actual internal workings of these companies, so I might do a further breakdown later down the road. But if there's anything that I'm missing here, you guys can definitely let me know in the comment section below. I'd love to hear what your thoughts are on these four companies. They are by the definition of what everyone calls money printing machines. They are absolutely absurd companies in the financial space, and they are powerhouses that will continue to be powerhouses well into the future. So you can always let me know what you guys think.
If you guys like money printing companies, consider slapping a like and letting me know in the comment section below if you own all of these already or if there's something that I missed, because I'd love to hear your input. I love this community very much. You guys are the reason I'm hammering out these videos. You guys are super cool, super awesome, and you've changed my life. So I look forward to chatting to you real soon.